The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back. What a long, strange trip it's been. Just traveled my butt off across Asia. Spent a lot of time in mainland China. That was one of the main purposes of going back over that way, and got some things accomplished. But thanks for being here today. It's good to be back at TFNN. A lot of things have happened. A lot of rhetoric coming from the new president-elect. We're going to talk about that a little bit, how it's affected the markets. We're going to talk a little bit about the currencies and the dollar, which is kind of dictating quite a bit here. I was on to get back here, I was planning on, starting back towards the end of the week last week, but the plane from Hong Kong to Newark is about 17 hours, and add this to it. Got on the plane in Hong Kong to get back to the States. Sat in the plane for 6 hours with computer problems before they actually took off. So had to land in San Francisco because the crew can't stay on the plane that long. Didn't let us off the plane in San Francisco. Got another crew on. Forget the passengers. And then headed to Newark. So it was a 24-hour in the same plane situation, which was a little different. Then missed all the connections, and that was fun. And the start in Hong Kong was after a couple of plane rides coming from the Philippines and mainland China. So interesting way back. Going to Europe is on an airplane to me is like a Sunday drive right now. So here we go. I used to think that was a long trip. Let's take a look at the euro really quick. I'll tell you what, let's take a look at the dollar first, and we're looking at the continuous contract of the dollar. Just to kind of review, I haven't obviously been doing the show for probably about 2 weeks here, but here's the long-term continuous on the dollar on the weekly. We talked about, regulating the kind of the long-term trade up with the dailies, but here's the weekly. And we also talked about this kind of harbinger of good news, I guess, when you look at longs on the dollar, had a weekly profile appear below price action. You guys know, I don't even think that's ever, percentage-wise not been, a huge victory for whatever instrument. It's placing itself below price action or vice versa on the short side above price action. But, the dollar's spinning around up here again. This is nothing you want to really get short right now. Here's the dailies on the dollar. There's that kind of back the truck up situation, that DMZ we had a couple of weeks ago between 99.74, that's the bottom of the profiles on the daily, and that 99.09. So that was, again, if you're going to kind of play the probabilities game, that was a really ripe opportunity. And we don't want to talk about the past too much. We want to talk about what's going to happen in the future. So here's the daily. You saw the weekly. Here's the daily on the dollar. Don't really see a lot of reasons. There can always be some kind of, fundamental news event to kind of jerk this around. But here's the 240s. There's really nothing to kind of hang on to on the weeklies and dailies. So all we kind of have to do is just go down another time frame and look at the 240s. So we've kind of been consolidating between this 102.76 and 103.15. These are all, again, numbers you can get right out of the scanner. If you go into our scanner, that's the beauty of having this thing. You can go into the Forex section and look at the euro, or excuse me, look at the dollar down here. Actually, that's in the future section, excuse me. And there it is. DX, continuous contract. These are the numbers. There's that green, pretty deep green there on the weekly, deep green on the daily. And there's that within the profile. But 49 continuous bars, even in a 240 uptrend, that's what that arrow up means. To where, the theme is really turn the wrench the same way until you're told differently. So we're supposed to be buying 102.76 and buying breakouts above 103.15 on that. And this is really, again, all you've got to kind of gauge anything on. Massive support around this 102.70-75 area on the dollar now. And it looks like it's crowding to try to puncture through that particular profile again. But, what does this all mean to quite a few other instruments that are, again, have a relative peg towards the dollar? Let's take a look at the euro. This has been one, if you've been watching this show, was super bearish on this thing, months ago, and, had quite a bit of a move up just up until that 113 area right there. This is our weekly on the euro. But, again, you're trying to still find areas to sell this thing. And it's just been not an easy ride down, but, that's why I talked pretty strongly about trying to trade this with an options hedge. Now we have eclipsed everything below. And we talked about this thing hitting par. I really don't see, I've said this a million times, but I don't see any reason why we're not going to reach par. Now we're consolidating below these previous lows from March 2015 and November 2015, and we're really not wanting to ricochet back up. If you're looking for something to reverse, you want to see it eclipse these type of areas, stop people out, and then do somewhat of a reversal type bar. And you're just not getting that here. You're getting pierce below, consolidate. So that's the long-term situation here. And we obviously started crossing below zero on our navigator. This is our long-term weekly here on the euro. So, the dollar's looking like it's on the launching pad again, and the euro's kind of consolidating below these levels that we've, kind of eclipsed over the past 2 years. So, again, what's the outlook here? You're supposed to be buying support in the dollar and selling resistance and selling breakdowns on the euro. And the most recent area you can kind of orient stops around the euro on the short side is 105.43, stops above there. I don't see any divergences in place with anything that I'm looking at on both of these products. So, things aren't too high and things aren't too low. They can keep going in the same direction. Again, we talk about this a lot. Don't try to be a hero. Some of these trades can make your whole month and year just by hanging in there and managing the position within the trade. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And kind of hitting some currencies here after we talked about the dollar and, where some possible trades are and which side of the trade you might want to block out at least. And that's kind of really, if you guys watch this show enough, like I'm kind of always, it's okay to be long, not okay to be short, or okay to be short, not okay to be long. Not necessarily saying that, back the truck up and get into longs or shorts. It's to me, it's about blocking out one side of the market. So you're only focused on the long side, for instance, buying support, buying breakouts, or, selling resistance or selling breakdowns. So that blocking out one side of the marketplace for an idiot like me seems to really, I'm not getting mixed up in the trade and losing sight of, the long-term angle that I'm really supposed to be trading the instrument on. Joey and I have talked about that a lot, even leaving some contracts on, even if you're getting out of the majority of the position, just to remind you not to mess around with the low probability trades sometimes, which are those contra trades against the long-term trend in one direction. That, it's hard to do if you're sitting in front of the screens, you see these opportunities, and then sometimes you see an opportunity that was a kind of one of those low probability trades that work out, and then you see it work out a couple of times in a row, and you're going, I'm smarter than, and that, it takes some patience to kind of deal with this. And, I always remember what somebody told me this a long time ago in Chicago when I was in the border trade and would have good days and thought I was really smart. And my mentor would say, successful trading is supposed to be boring. So you're supposed to make money doing this. Be patient. Don't get too excited. Turn the rinse the same way. It's a numbers game, and that's what really helps me. So let's take a look at the yen here. Okay, shut up, Logan. Here we go. Got a new profile attempting to appear. This is a weekly on the yen, and we talked about, I got stopped out of this trade way 2 months ago below this 103.50 area. It went a little bit too deep into the profile for my blood, and that's what these ricochets mean, these reversals. These are you know, things to be aware of, because when you're basically in some market profile theory type concepts, when you dive into these balanced areas again, especially from above or below, a lot of times you will explore the entire fair auction. As you can see there, this is our weekly on the end. Dive in, boom, we hit the other side of the box. We didn't quite get there on this one, but you know, you're usually in store for some more downside once you dive into these balanced areas. But we talked about trying to get back in the trade above 103.50, and it really talked about not a lot of reasons to get out of this trade. And here's the daily. My goodness, hold on. Here's the daily on the end. And there's that 103 kind of breach right there. But, you know, we've tried to use the dailies to regulate the trade up. And, you know, even though we've had new profiles appear every once in a while, they've been below price action. And that's the case again. So these balanced areas, these fair auctions appearing below price areas, or price levels, excuse me, they're really bullish. And, you know, as you look at this, you know, what do you do with this now? I mean, we've got a weekly new profile attempting to appear. That's a pretty serious sign on the long term. That may not stay in force, but that is a sign in itself. I'm not so sure, you know, this is one to really be taking off the whole position, though, because, you know, with the dollar on the launching pad, as we've talked about before, and this profile appearing below price action on the daily, I'm still a lot more biased towards the long side of trying to hang in there with this trade. I think Joey talked about 125 on the end. I'm not really averse to that statement, but, you know, there's going to be some, you know, backing and filling along the way, as they say. But the long-term trade, I think, is still in force here. If, you know, if we get a new profile appear next week and this stays yellow to the end of the week, that may be something to really say, you know what, let's call it quits for a little while. We can always get back in the trade. But right now, it's just a little bit of a sign that things may be resting, and we may come back and, you know, retest 115.90 on the end. Let me read the den a little bit here. Okay, we're going to hit some grains in just a little bit when we finish up with the currencies. The British pound, you know, got really. This is our weekly on the BP here. You know, I don't see a lot of leverage in this trade, really one way or the other. Here's our weekly. There's really not a lot of divergences going on. We're kind of in the middle of the fair auction, and I think you got better ways to put capital to work other than playing around with the British pound. I mean, the British pound, you know, since it dived back in the weekly box there, you know, we're at a POC at 122.30. You know, it's a crapshoot right here. We could kind of fall off the other side of the mountain, or we could bounce up, and I really don't see a lot of things out there that would give me any good biased leverage on this trade right now. So this is one I'd probably just stay away from until things kind of start showing themselves a little bit more. The Australian dollar, I was pretty bullish on this thing for a while. The spine's kind of been broken on this. The US dollar going nuts hadn't really helped this, but 73.56, that's a big number there, breaking down below profiles. And I think you kind of stay away from this, because I'm not so sure this thing's going to continue to tank. But again, it's almost, you know, kind of okay to be short, not okay to be long this. And the okay to be short is not something I'd actually like to get short. So let's take a look at the Chinese yuan currency here. We talked about this again. You know, we've got a profile appearing below price action, a profile appearing below price action. These are all bullish setups, and 7 looks like it's going to be a foregone conclusion here on the CNY. So here's our daily setup on the CNY. Let me see if I can get this into perspective here. So again, I kind of feel like 7 is going to be the hit it and probably flush through it. But there's really not a lot of ways to play defense on this trade right now. Just kind of showing it. Let's go back to our futures grid. Let's hit gold really quick. Let me see. All right. So, big reversal outside the box on the weekly there, but let's kind of figure out what's going to happen now. That's our weekly view. This is our daily view. Kind of had a gift already this morning. Profile appearing above price action. We go up there, we hit resistance, 1152 came off. That's your stop above area. I don't see gold really having a chance to reverse here yet. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. And let's take a look at March beans. Had a question about that in the den. We've got a big, weekly profile sitting above price action now. And this inflection point, 10.0, is that 10.06, 10.08? That general neighborhood is sitting there. It looks like we're trading about 10.10 right now. I think this is, in my opinion, kind of block out the long side. That's just my opinion on it. I know we've got a new kind of supply demand area happening down here on the daily, but you got a couple of things going on here. We started crossing below zero here on our navigator on the daily. We've also got some pretty serious resistance between 08 and 19. I don't even think, if we get up to 19, I think that's a full-blown sell. But that would, if you're long, I think you got to start, unfortunately, again, my opinion, scaling out of some of this because you got some headwinds here. I may be wrong, but the setup kind of looks, and we've also got something going on here. The closed last week, just closed right back in the fair auction, and a lot of times that'll be explored more so after that close. Doesn't have to happen the next day, but you got this kind of anvil sitting on top, and you've again dipped into a pretty important fair auction that it rattled around with before. So I'd rather be looking at this from the short side than the long side. And I know that kind of contra trade situation was, I think somebody that didn't say they were long from $9.99. I might have to take the money and run pretty soon on that. Again, just my opinion. Let's take a look at February crude. And if you got any comments about that, feel free to call in. The numbers to call in are on the TFNN homepage. Here's crude. There's nothing really shortest camp type scenarios or setups that I like here. This is one that I think you got to be looking to trade breakouts again above 54 on crude. Stops can be oriented below 52.26. I think you got better things, better setups in crude right now, but that's kind of my take on crude. Let's go into a couple of ETFs. And silver's a very similar situation to gold. It's just continue to sell resistance until we have some technical changes here. The XLF, this is the weekly, and kind of a new profile attempting to appear on the weekly, but here's the daily. We had this profile appear below price action, kind of got a conflicting situation here. But what better time to be a bank than right now? it's these things have done some crazy things for people's investment portfolios lately. My goodness. Moonshots in no time. This is JP Morgan. This was kind of the buy the strong of the strong as we were sitting here before the election hullabaloo. And it's just really showing no signs. Again, how do you hang on to trades that are profitable? This one really hasn't given you a lot of reasons to get out of this trade whatsoever. If you can stand, not getting the high print and just kind of letting something breathe, and if you get kind of stopped out of it or profit stopped out of it on the downside, that's okay. But a lot of times you want to let these long-term setups and stocks that are showing themselves early breathe. Just give them a chance to make you a ton of money. These are some of the ones that there's been zero reasons to get out of these. So let's hit a couple other ETFs. A couple other ETFs, the XLU, this has obviously been one kind of rate sensitive, sell resistance, sell breakdowns, take stabs at it from that side. I still think that's going to be the case. We haven't really hit the 10-year and the treasuries, which the utilities kind of play against to some degree. But we're going to take a look at them right now, just to catch up on all the things that we missed while I was gone. Here we are. Continuous contracts on these now. So here's the 10-year, and we've talked about there hadn't been a lot of reasons to take this trade off once the spine started breaking on the 10-year. Here's the weekly. And still don't see, I mean, there's really no magenta bars here happening on the long-term weekly or the, let me just pull up the daily here, sorry. Got crossed up here really quick. So on the daily, again, you've got price action below a profile that was emitted about last week sometime. Still, really no reason to take this off. I mean, you've actually got more reasons to short it now. Just amazingly so. Remember these, dollar getting strong and, a couple other things that are going on the planet right now. The 10-year really is, there's really no reason that this thing, I mean, we talked about this last time I was doing this show. We were talking about it back in here. And now you got another, huge positive on the short side for this particular instrument. So let's take a look at a couple other ETFs before we hit this next break. Let's take a look at the XLE. This has been one, kind of started showing itself early, kind of like the Saudi stock exchange before, the oil started blowing a gasket here. But 7140 was kind of long-term support on that. There's been some great plays within this sector, kind of, buying the strong of the strong in the XLE. We're going to go into the scanner really quick, show you a couple of these. Let's go into the ETFs here and XLE right there on the daily grid. There's been some awesome buy the strong of the strong situations here in the XLE. ExxonMobil, let's take a look at this one. This is one we had been talking about. You got another kind of bullish setup here on ExxonMobil. 89.31 is the top of the profile. This is the profile appearing below price action. That's a generally good thing for bulls. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software
software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Somebody at the den was asking about some China A-shares short ETF. I just want to look at the CSI 300 here. It's the Shanghai, basically the Shanghai 300 index. Here's where we're at. So we had a couple of weeks ago, we had a harbinger of kind of, hey, resting point indication here, this yellow bar on the weekly. This is kind of a new profile attempting to appear. This is all in the scanner. And then, you know, we've kind of reversed this week back above these lows of the box, the bottom of the box, 3302. So we're at support here on the Shanghai. On the Shanghai, and when we look at, what was it, FXP? Is that it? Yeah, ultra short China. I actually think this may be something that, I know there's not a lot of, you know, inflection points up here to take, you know, profits on, but just because that CSI 300 is at support, you may get kind of a bounce there in the Shanghai 300, and you know, maybe time to take some off the table in the FXP situation based on that alone. So, if that makes sense. A couple other stocks I wanted to look at today. Of course, we got to look at Amazon. So, you know, and let's take a look at the XLK first really quick. So, here's, you know, the XLK rattling around, breaking above profiles 4784. The indices, to me, seem like they're going to go higher. We're going to talk about the S&Ps in just a little bit here. But as we look at the XLK, not looking bad here. Amazon, finally going back to this one. You know, to me, you've got better things to really devote time and energy and money to right now than Amazon. You got huge support at 723 on this stock. But again, I mean, you kind of look at the relative strength of it. Don't know if the market even going to new highs is going to drag this up significantly. So stock looks a little tired, to say the least. And we got to hit Tesla here. So the eternal short has now started to get above the weekly profile. So 208, I took a whack at it there. I got stopped out. That's the way the ball bounces sometimes, but I, you know, still think this is not the, you know, the long to really kind of get excited about. I'm sure David White's probably got something to say about that. Johnson & Johnson was one that kind of stayed on their short list for a while, and interestingly enough, you know, we're just not getting any help from the market here. We're not, the stock's not moving up with all the market help in the world. 1723 stops oriented above there. I think you could easily revisit 111.96 on this particular stock. That's one that's kind of stayed on my radar screen for many reasons. And I'm, going back to China, I'm not so bearish on China. I mean, I'm actually kind of bullish on China right now. And I think having it at support right now is a really good reason to take off FXP. Taking a look at Disney. Again, breaking out, kind of rattling around above 96.85 and then being on the launching pad there. What do you do with Disney? I had a couple of emails about this one, and I'm sorry I haven't been responding to a lot of emails lately, but there's really no reasons to look at this from the short side. It is not too high. It's something that you got better things to look at from the short side. And what you can look at from the short side, going back into our scanner, and let's look at downtrend resistance. This is going to put some things on your radar screen that are sitting around inflection points to try to whack. I'm not so sure the market's going to come back. So you're trying to hedge yourself if you're trying to short the market, trying to find things that are just not cooperating. Couple of things out here. Visa, let's take a look at this one. It's really wild how this stock is really not, been doing some cool things here. Visa's one. Public storage, let's take a look at this one. Yeah, I mean, these are stocks that just can't seem to even get through the top of the fair auction here. PSA, there's quite a few other stocks here. Stocks that are breaking down right now. Cardinal Health, Coach, DR Horton. These are all relative to profiles. Walmart stores, WMT. That's the picture on Walmart. You see, where your area to play defense is here. But let's go back to the index itself. So here's the S&Ps. Here's a continuous contract. We switched over to those in the scanner and on the screen here. 2261 looks like that's where we're printing right now. Here's the daily unfair highs. This is, there's just really, it looks like this thing's just kind of hovering to move higher. And I don't see any big downdrafts happening. If we do, 2236 would kind of be the, wishful thinking area on the S&P. So looking at some of those stocks from the short side that we showed earlier and that we called out in the breakdown situation, like Walmart, for instance, that would be a more appealing way to try to short the market right now, is to try to find instruments that are just not cooperating. And if the market does go higher, hopefully those instruments will just kind of languish and not cause you any pain on the short side. That's kind of the way I try to find anomalies. Let's take a look at Coca-Cola. All right, so we talked about this one, I think, before I took the sabbatical there. It was a sabbatical to work more, by the way. But, there's really, in my opinion, there's no reversal coming anytime soon on this. The dollar is just a crushing blow to this thing. So keep that in mind. I think the dollar's going to go higher. Caterpillar, with all the possible impending, building projects that are going to happen, this stock has, just really enjoyed this. So 90.57 stops below there. I think 97.40 and even higher on this stock can happen. So you've got a lid up top around 96.5 to 97.5 on Caterpillar. Take a look at a couple other possible shorts. Merck. Here we go. All right, so we're going to hit this when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Somebody in the den said they were in this stock. Just want to pull it up. It's called Drip, and it's definitely a good 4 symbols for the stock. Looks like. I'm assuming this is it's the 3 times bear shares for the ETF for the daily S&P oil services. With the situation with oil right now, I don't know, if this is something that's going to reverse. So I don't really have too many comments on it. I mean, it's just something that looks like it's going to continue to trail down here. I want to look at the staples really quick. All right, so, I've been looking at a couple of stocks in here. This is our weekly view on the staples. And before I get into this, I just want to go back into the scanner really quick, and I want to pull up something on our breadth charts, which I look at a lot to try to get some kind of guidance, coupled with, inflection points based around those certain time frames. So if I go in here to the weekly or daily, I get the box level, so to speak, the unfair housing unfair load and the POC. But as I look at the weekly, something, it's not kind of totally overbearing yet, but a lot of the stocks in the S&P are starting to show new profiles on the weekly appearing above. Now, I said before, it's kind of still block out the short side and try to trade the long side on the S&Ps, but this is something, when this starts getting in the 12, 13, 15% range, then it's something to really start paying attention to. But, we're starting to climb here, and, if you're looking for any type of good news on the short side on the index, which I'm not saying that's the smart trade right now, keep your eye on this number. So going back into the XLP, I like how this thing's rally back up into the box, and a lot of times these fair auctions are explored. This is one that it's not a terrifying trade if you're wrong. Orient stops below 51.69. I really feel like we could kind of base here and see 53.16 on the XLP. And if you're looking to try to trade that even in a higher probability manner, go into the scanner, get into the ETFs, pull up the staples, and try to find stocks that are sitting, and let's just do this together, that are sitting, maybe that have pulled back into kind of maximum support. So what I did, and I don't know what the chart looks like on this, but I like the setup. Trading above profiles on the weekly, trying to find something to buy that is maybe pulled back into a maximum kind of buy point here. So as I pull this up, this is a picture of KR. It's a staple. This is our weekly, trading above profiles, but again, pulling back into an area that we may be able to hit it on the long side. So if I go in here and I just kind of kill that. So there's Kroger. Here's one, Phillips PM, Philip Morris. Let's take a look at this one. I'd still probably stay away from this one on the long side. I think you got better staples out there. Tyson Foods. Let's take a look at this one. Not the best. Guys, you've been great. Thanks for having me back. Stay tuned for Larry. Have a good day trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.